The ABCD pattern is the simplest of all harmonic patterns to recognize. The ABCD pattern was originally adapted from the Gartley pattern. It is the basic framework for all other harmonic patterns. While you may not have a perfect ABCD pattern in each harmonic setup, you will most likely have at least an alternative form of it. It is a visual geometric representation of price and time. The pattern is comprised of 3 consecutive price swings or trends. It can resemble a lightning bolt on a price chart. The AB equals CD pattern is a price structure where each leg is equivalent. This structure can work on any time frame in both bull and bear markets. So let's take a look at the pattern setup. On the left will be the bullish ABCD pattern, and on the right will be the bearish ABCD pattern. To start the pattern, you must first have the A point. The A point is the highest point of the bullish pattern and the lowest point of the bearish pattern. Where the B point ends is very important. The length and time in which it takes to go from point A to point B will set up the entire harmonic move. Point C must retrace either 0.618 or 0.786. Some will use 382, 50, or 886, but 618 and 786 set up the most harmonic move. The D point is the completion of the pattern. This is where the BC projection should converge with the completion of the AB equals CD. The BC projection should either be a 127 projection or a 1618 projection. It is important to note that a 618 retracement of the AB should project a 1.618 D point. A 786 retracement of the AB should project a 127 projection. So why do we use the 1618 for the 618 retracement and the 127 for the 786 retracement? It's because it is the reciprocal of each Fibonacci number. To get the reciprocal, all we do is divide 1 by the retracement. So 1 divided by 618 equals 1618, and 1 divided by 786 equals 127. The most important consideration to remember is that the BC projection should converge closely with the completion of the AB equals CD pattern. Now that you're very aware of the basics of this, let's walk through it in layman's terms. So we will have an initial push down or push up. This is the A to B move. We will then have a retracement of this initial move, which takes us to C. We're looking for the 618 retracement or the 786 retracement. If we get the 618 retracement, we will take our Fibonacci projection and we will look for the 1618 number. If we get a 786 retracement, we will look for the 127 projection into the D point. Knowing which projection to use will make trading this pattern much easier. In an ideal world, the A to B move and the C to D move would be identical in both price and time. This means that if the A to B move is a drop in 100 pips in 3 days, the C to D move would be a drop of 100 pips in 3 days. However, this is very unlikely to happen, which is why we look for patterns that closely resemble the AB equals CD move. This will become much clearer when we look at a real market example. The PRZ, or the potential reversal zone, is all about the D point. This zone will make or break the pattern setup. As price enters the PRZ, we will begin looking for an entry. An entry would be confirmed by price action. You can either wait for confirmation on the current time frame or go to a lower time frame and look for a signal there. Signals would be reversal candlestick formations such as a hammer, hanging man, shooting star, or engulfing patterns, to name a few. As we have stated before, the BC projection should converge at the completion of the AB equals CD pattern and be either a 127 or 1618. It is important to note that a 618 retracement at the C point will result in a 1618 BC projection, and a 786 retracement at the C point will result in a 127 projection. Once we get our confirmation with price action, we will set our entry, but not before knowing where our stops are. To set our stops, we will use these parameters. If it is a 127 projection, we will place stops below the 1618 level. If it is a 1618 projection, we will place stops just beyond the 1618 level. Stops should be dynamic and use structure if possible to set protective stops. To set limits, we will use these parameters. Take profit 1 is the 382 retracement of the A to D move. This is the entire length of the pattern. And take profit 2 is the 618 retracement of the A to D move. In the real market setup, we will show you how to roll your stops to break even. As we've said before, the C point retracement helps us use the reciprocal ratio to find the BC projection. To find the reciprocal ratio, all we do is take 1 divided by the C point retracement, and thus we have our BC projection. The reciprocal ratios that complement the AB equals CD structure are as follows. If we have a 382 retracement, we are looking for a 2.618 projection. A 0.5 retracement looks for a 2.0 projection. A 618 looks for a 1.618. A 707 looks for a 141. A 786 looks for a 127. And an 886 looks for a 113. Now let's take a look at the real market example. As we said, we would show what real price action looked like in the ABCD pattern. In front of you, we have the Great Britain pound and United States dollar. We are using the daily time frame for this example, but you could use any time frame that you wanted. We are using the daily time frame for this example, but you can use any time frame you want to find the ABCD pattern. It is likely to show up on any time frame and any currency pair. We are going to give you a few minutes to look over the graph and find the ABCD pattern. Granted, there are probably more than one instance on here that you'll see the pattern, but we are going to look for one specific one. So take a few moments, either pause this or just look for it, and then we'll move on from there. Okay, so the ABCD pattern we are looking at is from the high right in the middle. We have a swing high to swing low, put in a little retracement here, and then another move down all the way to here. Okay, now you will, as you keep working with this, you're going to find that nothing is perfect. Okay, so we try to find the best representation of price and time. So what we mean by this is, in this one, we fell from 167.37 to 160.50. So that's about 700 pips. We would look for the same distance. So we have 165 down to, just a little bit above 158, or below 158. So it's pretty close. Here's how we will measure how close it is. So we have a measurement from the high to the low here. Another thing about this is it actually incorporates time, because if we take this and move it over, if it was the exact same time frame, and let me just try to get it, it would end right there, but it didn't. So we have about 10 days longer for this pattern to set up. The first thing we got to check here is our C point and see what the retracement is at, so we can see what projection we're going to be looking for. You'll notice that in this retracement, Fibonacci retracement tool, I put the 707. Typically we will not see this in a Fibonacci retracement, but you can insert it yourself. And the reason we do this is because the 707 has a distinct BC projection. So you will notice that we just hit the 707, which means that we are looking for a 1.41 projection. Now that we have found the retracement and are looking for our projection, we have to use the Fibonacci extension or expansion tool. So we will take the retracement tool off and find the expansion tool, and we are going from the BC leg. Often traders get confused and use the A to B leg, but we are looking for the BC leg. So I'm just going to make this a little bit wider so you can see it easily. But we'll take from the top of the BC leg, which this is even with, and we will go down to the bottom to B point, go ahead and go right back up to the C point, and look for where the extension comes into play. So my extension that I was looking for is 1.41, or if you look at extensions, it's 1.414. So I will put a little ray there so you can see where that ends. Okay, so that marks the expansion part of my PRZ, and now we will look for the ABCD completion. And I'm just going to use this. This is the easiest way. And you can see that the ABCD and the 1.41 come right at the exact same line. Okay? And the last part is the 1.618. So we will go from the high, which is the C point, down to the B point again, and right back up to the C. And we will look for the 1.618 level, and we will put a ray on that. And this is my PRZ. So what I will do is put a box around the area that I am looking to get long in. Okay, and I'll take away the rays. Okay, so in this area, I can either wait on this time frame for confirmation, and you can see that we have a hammer right here, or I can go down to a lower time frame and get my entry, in which I could probably find an entry a little bit lower, which is why I recommend you go down to a lower time frame to find your entry. But let's stay on this time frame for the sake of this lesson. That way we don't have to be switching back and forth. So we have the top of the PRZ, which is the 1.41 and the ABCD completion, and then we have the bottom, which is the 1.618. So let's say I stayed on this time frame, right? So my entry would be after the daily close, which put in a reversal candle right there. Okay, so I'm getting long at 159.11, somewhere around there. All right, now we have to find our targets, and we know that our stops are going just below the 1.618, and the 1.618 is around the 157.56. I'm going to give it about 20 pips or so of breathing room. You can give it a little bit more. Typically, the higher time frame you go, the little bit more breathing room you want to give it, because 20 pips on a daily chart is not that much compared to 20 pips on a 5-minute chart. All right, and it can affect our risk reward ratios. So now we have to find our targets, and we go from the A point, so all the way at the top, A, all the way down to the entry point. And the entry point here, which is the D point. The entry is the D. So we go A to D, and we are looking for the 382, which is right there. I'm going to put some rays on these so you can see them a lot better. And the 618, which is right here. And I'll wipe away the retracement tool, and you'll be able to see the risk reward ratio here. So it looks like we are entering at 59.11, going down to 57.35, which is about 170 pips, and we are gaining from 59.11 to 62.28, which is around 300 pips. The easiest way for me is just to put this in here, and it's a little risk reward calculator. It just shows you. So that, and roughly we are getting almost 2 to 1, 1.8 to 1 on the first target, and almost 3 to 1, 2.9 on the second one. So this is a pretty good risk reward profile. Typically harmonic patterns, as long as you're finding it near structure, which you can see that we are finding it near structure. And yeah, we have a little bit of structure here. I'm sure if we zoomed out, we'd have more. Yeah, so we have some more structure right here. And we're only looking to the left right here, because looking to the right is cheating. Obviously, this hasn't happened yet, so we're looking straight to the left for this one. All right, so we look for some structure to give us a little bit of added support in this area. So we have some structure, which makes it a good entry. Okay, in this one, I've now entered. Okay, we move up, have a little bit of a retracement, and move up again, and we hit our first target at the 382. Typically, and the way that I recommend you trade this is we move our break even, or our stops to break even. Okay, we're already out of half of the position. Okay, so let's go over that one more time. We have our stops, we've entered it, and we get to the first take profit. We are going to clear half of our position, and we are going to move our stops to break even. And the reason we do this is because we want to lock in profit. Trading is all about taking our profit. Okay, we want to take as much profit as we can and just continue to accumulate that profit. All right, so we will lock in the first profit and move this to break even, and the break even just protects us. So sometimes you'll see we get to the 382 and we'll roll over and continue what could be a prevailing trend. So we just want to protect ourselves. We're in the business of protecting ourselves, preserving our capital as much as possible. So we've locked in our profit. In this one, we made a beeline straight to the 618, and we would lock in our second position, our second half of position. So we would make on the first half about 1.8 to 1, and on the second half about 2.9 to 1. Okay, so you can choose to either open one position and take half each way or half at each spot, or you can open two positions and take one position at each point. It depends on how much risk you want to take. Okay, here's one more way to trade this. Okay, so we have moved our stops to break even. Say we've just hit our profit right here. Okay, so we've moved up and we get to the second area, and the 618, instead of taking profit here, what we do is we roll our stops, and we can roll it a fixed amount. We can roll it to the 382. You would have to decide what you want to do. You could just continue rolling fib levels. So if let's say we rolled it fib levels. If we rolled it to the fib level, we would go up, hit the 618, not locking our profit, but we're rolling our stops to the 382, and then you see we come down and we actually get stopped out here before continuing higher. We can do it that way, or we can on the daily chart. Obviously this is going to be all relative. We're on a 5-minute chart. I'm not going to roll it 200 pips. It's not feasible. So I'm going to roll it maybe 200 pips from 159 to 161. And you notice we did not get stopped out there, and we would have moved up, maybe, I don't know, another couple hundred pips and maybe rolled it again. Either way, this rolling of the stop and trying to follow it is trying to take advantage of a trend. Maybe we're getting in early on a trend, or maybe we're continuing a trend, so we're trying to ride the profit as long as possible. Whatever way you decide to do it, just make sure you're rolling your stops and protecting your profit. Now, if you're asking for my recommendation, the way I trade them is I roll it to break even once we get to the 382, and then I take half my position off, leave it here, and take my other half off at the 618. So that is what I would do, or what I do personally. You can decide to follow, or you can decide to do it the way I do. Just make sure that we stick to the important things. We find a harmonic move, and harmonic is just a rhythmic move, so you can see pretty rhythmic, pretty symmetrical, and we look for a good entry point. We look for price action to tell us we're entering at the right area. So in this, you see a pin bar, so we've pierced it on the daily. May have not had such a big pin bar on an hourly, but you can see the piercing here, so it's a good signal that, hey, we're ready to reverse. Bulls are sitting here buying it up. Okay? Now that we have seen the real market example, it is time to reiterate the most important points of this lesson. First, the 618 retracement at the C point will result in a 1.618 BC projection. And second, a 786 retracement at the C point will result in a 127 BC projection. This may seem a little bit redundant, but the BC projection is what sets up this entire pattern for completion. The best thing to do is to take a day or two and just look at this pattern. Use any time frame you want and solely focus on this type of harmonic move. Once you feel like you've got it down, it is time to move to a new harmonic pattern.